Natasha Koch here with the Van City Home Team, and welcome to this Tuesday Real Estate Tips. We're talking about locking into your mortgage. Is now a good time? I thought it was because I see that the rates are starting to climb, and my first instinct is if you have a variable mortgage, lock it in. So I reach out to Jeremy Langdon, the mortgage bro, who we often use to send our clients to. And he sends back an email with a big screaming, no, don't do it. Don't tell your clients to lock in. You could be inadvertently costing them money. So I wanted to know why. And here's the example he gave. If a client in a variable rate mortgage locks in, they'll be required to lock in for the same term and the same length of time as their existing mortgage. That I actually didn't know. The average fixed rate now is at 2.5% and the average variable rate is at 1.5%. To lock in means that they will immediately start paying more, actually $52 a month more on every 100K. So this is before any announcements have been made by the Bank of Canada. This is just talk that we're seeing that the mortgage rates are going to increase by the end of next year. I mean, I think that inevitably they have to increase, but it's really important, and he's right, to weigh the pros and cons of whether or not locking in is the best strategy. So let's talk about if prime does increase. It'll likely increase, he says, by 0.25%, which is about $13 a month on 100K. And then it usually takes about 3 months for them to see how the increase affected the economy so that they don't raise the rates too quickly. So most important thing is that locking in, he tells me, is not a blanket advice. If somebody needs to ask any questions, he is available to answer those. So please reach out to me if you want his contact info. It's kind of on a case-to-case basis. So financial situation, home ownership plans. If you're planning on moving and you lock in, he's right, and I do know this, you could be subject to a big penalty if you do have to break that mortgage term early. If you move out of town, and different banks and lending institutions have different penalties, so you definitely want to read the fine print on those. So typically 3 months penalty of interest, up to big penalties like $20,000. I just had a client actually have a penalty of almost $10,000 to break their mortgage, and it was heartbreaking to spend that much money on just breaking your mortgage. Anyway, if a client has a variable rate mortgage right now and wants to lock in, there's a couple of other ways to do it. You could use the prepayment feature to increase their payment equal to what it would be if they locked in. So that way they're paying it off quicker. The results cost them the same. It gives them protection against the future rate increases. So if you are worried, that was actually probably the best advice that I thought he was giving. So speak to a mortgage broker. If it's not him, speak to yours. And I hope you found this Tuesday tip useful. So don't lock in, everybody. Just hang tight. Have a great week. Bye-bye.